Let me record. Good, I'll start recording. So now, whenever you come to the market, what is the first thing you should do as a trader? The first thing you should do as a trader is to know the direction of the market. Get your directional bias, possibly your daily or your CA or your weekly bias, anyone. Just make sure you know you have your directional bias, right? Now, how are we going to build our bias? We build our bias by just three, by just, let's see, three top-down analysis from weekly to daily to daily to 4 hours. How do we know? How do we know now? How can we start building our bias by weekly? We just when we switch to weekly time frame, when we have candle something like we know that candle will print like this. Assuming now this is a this is a candle. This is the candle we have. Then the next week candle now. When the next week candle come, it open like this and maybe close here. What should we expect? We should expect the candle if we have this thing in the candle. Now, looking at these two candles, this this present week candle sweep the low of the previous week candle and close above as a body. So you pay attention to that candle closure. I'm telling you that assuming this is a red candle, that is a sell candle, right? Good. Now, when you just have the weekly candle sweep the low of previous candle and now close above as a body, and then you should just start expecting that, okay, now the market direction is likely to be buy. But how can you confirm the market direction is going to be buy? You confirm it by switching down to daily time frame to look for a bullish engulfing. Bullish engulfing is very simple. Every trader here can simply identify a bullish engulfing candle. It's just a situation whereby a green candle, we have something like this. A green candle engulf a red candle, something like this. This is what we call bullish engulfing. So in the daily time frame, if you have this on weekly, you have this on daily. Now, is that enough for you to see that? Is that enough for you to see that you are really going up? Yes, it's kind of enough, but you need confirmation again on the top on the next time frame, which is 4 hour time frame. Now, this red candle, let's assume this red candle is printing series of downtrend, something like this, right? Now, if you see it on that 4 hour market now did something like this and maybe form this, then market take this high and start coming down. This is what you should expect to see in 4 hour. You are expecting to see this sweep of liquidity here and break of structure. This break of structure here. Now, there are so many traders who are yet to understand who are yet to understand structure clearly. So for that reason, maybe might be hosting a class that will be teaching structures fully. Now, looking at these structures, we have you have to know the difference between breakout and break up structure. Now, this is a breakout, while this is a break up structure. The two of them are shift in market structure, but breakout is just shift in internal market structure, while break up structure is a shift in the main market structure. Now, if you have a shift in market structure on 4 hour, especially when you have a break of structure on 4 hour, then you have now confirmed that your directional bias is a buy bias. All you should be looking for in the market is a buy opportunity. But when looking for buy opportunity, does that mean you cannot have a sell? You can still have a sell because market have to sell before it buy. But I will recommend everyone here to just trade with the trend. Although there are some situations that we might trade against the trend, right? Now, when after knowing your bias, what is the next thing for you to do? Next thing for you to do is just to know your entry, right? Your entry, where you should use as your entry, knowing your protected low, where your stop loss should be. Now, the last 4 hour swing, which is this one now. This is the last 4 hour swing that we have. After market has break structure, this is the last 4 hour swing we have. Now, this place is what we call our reference points. We'll be using it as our reference points. We have 5 different entry models. Now, the first entry model, let me just see. The first 3 entry model, we use this our reference point as our stop loss as the protected low. Market will not rate our reference points. And the last two entry model, market will sweep this our reference point. It will serve as liquidity. Let me just give you a summary. There are certain time now that the market will now come very close to our entry point like this, and it will just trigger. It will trigger us like this, something like this, and start going up. Now, there are some situations where market will not even come closer to this our entry point. Market will just use this point, this breaker block. Market will just use a breaker block here and continue going up. There are some situations whereby market will use a wick of the candle that is here. I'll explain how you'll be able to identify those situations, maybe if time permits us. Now, these are the first three entry model that our stop loss is at the protected area, right? The next one now is a situation whereby our reference points will not be our protected area. Market will now read it. Now, the first one is market will now read it immediately, and this place it will serve as an internal range liquidity, and market will now keep going up. Now, the second one, the fifth one now is a situation whereby market will now come to our reference point, do a small retracement as if it wants to go to our direction, and it will now keep going against our direction. After knowing that market has shift structure, we have our confirmation that the market direction is going up. But now market has swept this and market is really going against us. So we can still use this. We can still use this and take our trade. I'll explain that to you later. I'll explain that to you later. So now, having understanding this, let's just go to the chart. Let's just go to the chart and have a commentary on the last trade we took. I'll use bar replay so that so that we just do everything sharp. Now, what do we have here? And I said we are starting from weekly. Let me just switch to weekly. Now on this weekly time frame, if you can see now the weekly time frame, we are paying attention to last 2 to 3 candles of the week. Mainly last 2 candles of the week. So now this candle and this candle, we'll pay attention to this one since this one did not sweep the low of this one. But paying attention to this one, how does it close? It sweep the low of this candle here. You can see it sweep the low of this candle here, and it's now close above, right? This is telling us that our direction we should be anticipating is a buy. We should be anticipating a buy. Now, daily, we'll just go to daily and see what are we expecting to find on the daily. We're expecting to see a bullish engulfing. Bullish engulfing. Now look at what happened here. This is a clear bullish engulfing that you can all see. It's a clear bullish engulfing, right? Good. Now, after seeing this, what should we do? We should now go to 4 hour and look for what break up structure and breakout on 4 hour, right? So now I'm switching to 4 hour. Connection. What's happening? Network. Okay, are you with me? Oh, so now I am here in 4 hour. Now let's pay attention to 4 hour. What do we have? 4 hour have break structure here. We break this structure. This is a break of structure. We break another structure here. You can see. Very obvious. And we have another structure here, which is telling us, yes, we really have a strong buy that is going to happen. Right? Now, this single candle break like 3 structure. And we now see market coming down here. When market is coming down, what are we going to do? Specific week, as I have explained earlier, we have a specific time that market will activate at key level. I don't know if you guys have not much on key levels. Maybe with time I'll explain key level. No, or let me just give summary of explanation of key level. Key level is any place where markets open and close, where candle open and close in a specific time frame, like in daily time frame, in a daily time frame, in a daily time frame. Some people are sending messages. What is it? So someone is saying that he can't hear me, that I should turn on my mic. Is my mic off? My mic is on. So,
No, 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 no. I'm born responding to someone.
okay,
I can't hear you, so I asked him to turn on his mic.
okay, no problem. Now, now, key level. When we say key level, it's any place where candle open and close. It's called a key level. So we have different types of key level. But the one we mostly pay attention to is the one that has an engulfing around it. Assuming we have a red candle here, since we are looking for by scenario, assuming we have a red candle here, then another bullish candle now came and do like this, right? This should be a green candle, bullish candle. So now this specific point where this red candle open this line here, because definitely before red candle go close, a green candle
But
must close here. Sir,
there are some people complaining that they can't hear you. I don't know what's the wrong.
but you can hear me, right?
Yeah, I can hear you.
Then maybe they're having problem with their mic or any or with their head or anything.
No, they should try to turn on their mic.
Or their speaker. It could be their speaker. They should check
Yeah,
their speakers.
okay. Kindly mute your mic. Let's continue, please. We don't have much time. So now, having this, now this point here where this candle close, sorry, where this red candle open, definitely this red candle will not open here unless if there is a green candle that close somewhere around here, right? Now, this open and where this green candle open and this close, and this now has engulfed them, then this point now you can just draw a line, and that place, that is the key level you can use as your reference, as your entry point. But are you just entering blindly on that key level? No, you are not just entering blindly. You have to go to 1 minute and look for a specific price point where the market will trigger. You need specific price point where the market will trigger from. You are not just trading blindly, because you don't need the market to waste your time playing around playing around your stop loss. So now what are we going to do? We'll just go to 1 minute and look at this point. What are we looking for on 1 minute? We are looking for, I am rest assured that everyone here know what is called an imbalance, an FBG, right? So now, what if in a situation whereby market form an FBG, a sell imbalance, the market is supposed to come and retrace like this. Market is supposed to come back. When market form this FBG, I don't need to explain more on FBG, maybe later. So if market is supposed to use this FBG to continue a sell, right? We just expect market maybe to retrace back inside the FBG or maybe 50% of the FBG and continue the sell. But now, what if the market now did not do that? Market now decide to come and raid the FBG like this and now form another candle above. Now, you can see we have another FBG. Market has produced presented another FBG for us here. Now, this is the old FBG that market was supposed to use for sale, but it did not use it. Now, it will serve as our IFBG, that is inverse fair value gap. ICT traders will know that. And now, this is the FBG. So, this FBG is now in line with the inverse FBG. You will just mark that point, this point here, and that is the specific price level where market will just come and retest. Market will just come and retest something like this, tap and continue the buy. So that is what we are looking for. That is what you go just go to 1 minute and look for. So now I'll go to 1 minute and look for this. This 1 minute, you go to 1 minute time frame. You check for that on 1 minute, 2 minutes, 3 minutes. The highest you should go is 5 minutes, so that you just get an accurate entry. You understand? Because most times now the FBG you are looking for should be around that key level that you mark, right? Now, you see, I mark, I mark that, I mark this blue line under our key level, right? On 4 hours. So now, anything I'm looking for should be around here. Look at what is happening here. We have series of imbalances here, one, two, and so much. But what happened? What does the market do? Market has rebalanced this first one. Market has rebalanced this second one up to 50%. But the market enter here. Market did not enter here. So that's fine and good. This is telling us that this is a specific price where market would respect and react. But but possibly market can come here or market can even come here. Markets might even decide to come to anyone here if we have anyone closer here, but I can't see anything closer here, so market will use this one. Now, what of inverse? Do we have an inverse? That is an FBG that market was supposed to use for sell. Yes, we have it here. You can all see this an FBG. The market was supposed to use for sell. Market has even used it and sold, but market has now come back and violate it here at our entry, right? Market has violated. Now this is telling us that the market direction, this is the specific price level where the market should go. So if possible, sir, you can just highlight this area like this. You will just highlight this area like this, and your stop loss can even be here. But I will recommend everyone to put his stop loss at a place where you are certain that market will not read. So where will market will not read? Market will not read you when you put your stop loss at your reference point. But I know what I did. I know the reason why I refined my stop loss to this point here, because I'm not certain if market will not ready. So what happened now? And I will now play so we'll see what the market did. Now, we can all see now market has trigger and you see what happened, right? Market has trigger and it has now given us our buy. Now, there is what is called relatively equal highs in price. Let me just explain this self, even though I was not supposed to explain it. If you are a trader and you trade support and resistance, you know what relatively equal highs are. Any place where we have a relatively equal high, it used to serve as a strong support or as a strong resistance. SMC ICT traders are very familiar with this. So now, what are we expected to do when we have similar things like this? We'll just expect a pullback. The overall direction of the market is a buy. But I said we might likely get a sell. It's very possible you can get a sell, right? Now, we have relatively equal highs. We have an imbalance here that market left. And we all know the main function of the market is to attack liquidity and rebalance and hold imbalance. Market has left this imbalance here. What should we do? We can start looking for sell immediately here. Now, since throughout last week, as I said, market was supposed to be using key level for entry. So you just look for nearest key level that the market will use, which is this one. Will you just go like that? No, you will go to 1 minute and look for what your inverse and FBG, which are in line. So if you just check this point here, when I mark at this point, there is an inverse in line with an FBG. I don't want to go to 1 minute for this one because I'm not like I don't want you guys to even get the sell trade because the sell is really against the trend and nobody should trade against the trend actually. So now let's play. Normally, I don't even know where to target, but normally on all my trades, I don't use to target more than 1, 2, 3. Highest I target is 1 to 3 or 1 to 4. I don't use to target much. So even this trade that you are seeing I know that the market is coming here. I opt out of this trade from this point here, somewhere around here at 1 to 3, exactly 1 to 3. I don't use to target much. Don't be a greedy trader. Now, this one too, you can see I just place my listing at what? You can see 1 to 3, right? I put my TP at 1 to 3. Now, we continue. So now, how are we able to get this buy that is here now? We already know the market direction is a buy. Market has rebalanced this old imbalance. The market entry point for the week is at a key level, which is this point here, this red line that I just marked, right? This is the key level that market is supposed to use, right? This is where this red candle close, this green one open, and we have a bullish engulfing. So this place here, this key level is our entry point, right? But how do we know? What should we do now? We just go to 1 minute and confirm a specific price level where the market will just tap and go, right? So we check on 1 minute. If we do not have an entry, we check 2 minutes, 3 minutes, 4 minutes, and highest we'll go is what? Is 5 minutes. That is the highest we'll go. Now this is the red line I mark. this is the red line I mark. If you look at a little bit above it, what do we have here? We have a clear, it's very clear. This is an inverse. You can see this is an inverse. Now, it's in line with this FVG. Again, this is a good FVG. It's very obvious and clear. Everyone can see it. But is that all? No. We have another one here. We have another one here. A very clear one. So which one is market going to use? We don't know. So what are we going to do? We will place our entry here and our stop loss should be below this one. So that market, if market do not use this one, market want to use this one, market will not just take us out. I don't know if you understand what I'm trying to say. So that's why I say, if possible, you can put your stop loss at the lowest low, here, where market will not go. So now let's go back to 4 minutes. Just make sure whatever you are doing, you have reason behind it. You have reason. If you are placing your stop loss at any point, just know that you have why you place your stop loss. So now this is how we got to get this trade here. So I will play. This is how we got to get this last trade here. As you can all see. And now we all know that the market is coming here, right? This is our main target. We also have similar. I have similar trade on GBP, on Euro USD, USD. Let me check this here. Good. Euro USD. Just like what I explained, earlier about the. Let me still use the bar replay, but let me cut it. So, what do we still have? What do we still have here? When we check the daily, let me just start from daily. We know weekly has sweep liquidity and close above. Or do I have to show you everything? Let me just show you. Weekly have sweep this previous week liquidity and now close here as a bullish candle. Now on the daily time frame, we now have a bullish engulfing here. You can also see a bullish engulfing. What are we going to look for on 4 hour? We just jump to 4 hour and look for a sweep, a break of structure, right? And now where is the break of structure? Market has sweep liquidity here. These are relatively equal lows, right? And this is another liquidity. Market has sweep this liquidity. But does the market break structure? No, market breaks structure. This is where market breaks structure. So now, where will be our reference points? I said the last 4 hour swing that leads to the break of structure. That is our reference point, right? That is this. This is our reference point. So our entry is at a key level. How are you going to know the key level that market is going to use? Since we don't have a bullish engulfing, you can start checking on 3 minutes. You in 3 hours. That's when you start going down. 3 hours, we do not have anything. We do not have a bullish engulfing. You check 2 hours. We check 2 hours. And you can see one here, something like this. Although this thing now look very indecisive. The candle look very indecisive, but it's really a bullish engulfing, right? Here. So now what are we going to do? We just need to check around this region here where we have that inverse, which is in line with an FVG on 1 minute. We'll just be doing the same thing every time again. So now this is our 1 minute. If we do not get it on 1 minute, we'll check 2 minutes. If we check 2 minutes, we don't have it. We'll check 3 minutes. So now this point, this is an imbalance here. You can see this is an imbalance here. But does it have inverse? It's not really clear that it has inverse because the inverse is not in line with the imbalance. So maybe let's check 2 minutes. 2 minutes. Okay. Now look at what we have here on 2 minutes. This is a good imbalance. This is an imbalance. This is supposed to be an imbalance, but market has already rebalanced it to more than 50%. But this is another one here. And now this is an inverse. We're running out of time. So let me just summarize. We're running out of time. So you see this is an inverse here that is in line with this imbalance here, right? So you can, if you wish to highlight the entire area, but to me, I will just put a single line here. And I will now, where are we supposed to place our stop loss? At the lowest low. We're supposed to place our stop loss at the lowest low. we're supposed to place our stop loss at the lowest low here at the reference point, right? But you can still refine your stop loss if you know what you are doing. And maybe with time we'll explain more and more about the entry model so that everyone will get it. Now, this is how we're able to get this buy. So now let's now play, and you'll see the specific price level, how market will now just react from our entry. You see this the specific price level where market will react from. So now I have given us example. Now it's remain a situation whereby our reference points, market will now use our reference points for our entry. Market will now use our reference points and give us a small pullback and now keep going against our direction, right? Now, in that very day is a day that it's possible that we can take loss if we don't know what the market is doing. But one thing you should know that if you are using this model, then definitely immediately you take loss, you can quickly recover your loss. You can quickly recover your loss. How can you recover your loss? Because whenever market violates our entry, then definitely market is coming back to react. If market take us out like this, market after doing this pullback, market now take us out like this, then definitely market will now come back to this entry and use it as a support or resistance, depending on you are buying or sell. Market will now use it and continue downward. It depends because I have said there is a specific route where market will now violate our entry. It will now use our reference point here now as a liquidity, right? And continue going our direction. But I'm talking of in a week that market will now violate us and keep going against us. Then that week, you just know that you are not using this. You will be expecting market to read that your entry high. You just wait for it to retest it and you continue with the market direction. I have an example in, is it gold? Yeah, yeah, let me check gold. Yeah, seems like happens because that thing happened last 2 weeks. That thing was supposed to happen last 2 weeks, right? I don't remember. Let me check. Gold. Ahem. This is it. Now look at gold. This is gold. You can see break of structure. I don't need to go back to start showing you from daily, weekly. You all understand that one. We have built the bias. So according to my bias now, the market was supposed to keep selling, right? That's why this is one of the reasons why I said I don't use to target much because this is where the target, the TP should be. But what did market do? After market has give like 1 to 7 bar, market now start reversing. Market now start reversing and now take me out. But I wasn't in the trade actually because I opt out of the trade around here. I just don't use to target much. Highest I target is 1 to 3. Highest. And sometimes I even use to target 1 to 2. If you are risking just $1,000 and you make your $2,000, you're fine and good. Now, this when the market do not get to your TP, when market do not get to your TP, when market do not get to your TP, what are you expecting the market to do? Now, market do not get to our TP. Market now come and take us out, right? Immediately we see that, we know that the market is definitely coming back to retest our entry. So that is why we just draw the line here. You already know how we got this sell, right? On 1 minute and everything. Now, market validated, so market will now definitely come and retest our entry. It will use as support and continue the buy. Fine and good. So I think we lost connection. That's all we have. I think that's all we have for today. I don't have much time. We expected much people to join this meeting, but most people were absent, maybe due to some reasons. I don't know if the admins decide that we should share the video. Maybe we might share the video for them to benefit. If you are here and you pay attention to what we see, definitely I know that you might benefit from something. Even if you have your own age, there must be something you might you might use from our model. This our model, we build it from a fusion because we study different concepts. So after studying all concepts, we just try to extract extract exactly what is working from different concepts and we added them together. That's how we are able to come up with this model. Now, I know some of you might want to what else? Some of you might want to join that our Forex Fusion. I'm sorry, it's not for everybody. It's just for we the admin that are there. But I don't know, maybe we'll decide to open it for others to join and things like that. And that is this thing now that we will be doing. Since I am not sure if we will be posting our trade, since that group we did not create it for Signal, so I'm not sure if we will be posting trade there. It just depends if we decide. But I just know that one thing is certain: we will be giving directional buyers for traders. So you find the entry yourself. Maybe that's what we should do. And thank you all. If you have question, sorry, we'll open the group. We'll open the trade with Khalid, guys. We'll open it so that everyone that is having a question or anything that you want to see, you please see it. You ask your question there and everything. And if you find this video helpful or interested, please make sure you share our link and the others should join. All right. The meeting is ending now because we don't even have the time has finished already. We'll see you on the group chat.